Switzerland, a small mountainous nation in Western Europe, the rise in prices has been far less dramatic.
What is the Swiss National Bank doing to bring inflation down?
Have you felt the effects of price rises and inflation over the past year?
Not that much, to be honest.
It's been all right.
Most of the things is okay.
What is it about the Swiss economy that
Which indicators are important? Why is inflation much lower in Switzerland than abroad?
And what can other countries learn from it?
And is corporate greed really the cause for inflation, as many say?
For decades, economists thought that governments could only fight high inflation by raising interest rates, cutting spending, or imposing price controls. However, in Switzerland, inflation has been discreetly crushed in an unusual, some would say radical way that no other large country has been able to imitate successfully when prices in Switzerland begin to rise too quickly. The Swiss National Bank does not simply adjust interest rates as other central banks do. No, they do something really unexpected. Now you may be thinking, why on earth would a central bank do to fight inflation? Why is there no inflation in Switzerland in the first place? As a result of the massive public spending packages and significant monetary expansion implemented following the coronavirus economic crisis, almost all of Western countries arrived in 2022 with some of the highest rates of inflation ever recorded. We're talking about the fact that inflation in nations like or the United States surpassed the 7.5% mark in December 2021. For example, all of this, of course, ignores the fact that the war in Ukraine increased price pressures beginning in February 2022. But what if I told you there is one country that is on its way out of this inflationary spiral? What if I told you there is a place where inflation has been completely unknown for over a decade?
It's because people are on average quite rich. The share of food in the overall budget of households is not as big as maybe in other countries. We also have inequality, of course, but from an international perspective, we have, I think, a very well-functioning social policy.
In terms of inflation, the Swiss Confederation appears to be in a different league, with price increases up to 5 times lower than its Western counterparts. It's as though the Swiss are from another planet.
As a result, Swiss citizens are generally less impacted by price hikes because they tend to spend a lower proportion of their income on essentials versus discretionary items such as vacations and hobbies, which they can scale back when prices go up.
Although I understand what many of you are thinking, Switzerland's inflation rate in 2021 was 1.6%, and, despite the fact that this is a very low rate, can we truly state that there is no inflation in Switzerland? In truth, this 1.6% inflation figure is an exception for the Swiss country, as inflation in Switzerland has been negative for 70% of the time since 2009. Not only that, but when positive inflation levels have been reported, they have never exceeded 1%. This is being translated into technical terms. Switzerland may be described as a country accustomed to deflation. That is, prices fall consistently year after year. The question is, why does this happen? Why is Switzerland free of inflation? Is it true that, unlike the rest of the world, its central bank does not print any money? Hold on to your seat, because the most interesting aspect is that not just is new money being printed all time in Switzerland, but it is being printed at an insane rate. Just to give you a hint, the Swiss central bank has raised the amount of francs in circulation by a factor of 4 in the last 10 years alone. This represents a significant growth in the money supply. In instance, it was about 60% greater than the European Central Bank during the same period of time. So, when others tell you that creating money necessarily leads to inflation, keep in mind that the Swiss scenario indicates that this is not always the case. A few questions arise. How does Switzerland get out of inflation, aside from low taxes and the most luxurious watches in the world? What distinguishes this country? Is Swiss deflation truly a better option than the other countries' mild inflation levels? But today we will deal with these questions. Have you ever thought how a central bank operates? As many of you are aware, a country's central bank is in charge of producing new money, regulating interest rates, and controlling inflation. But what is the sequential procedure that enables them to undertake all of this work? To manage inflation, the central bank introduces fresh money into the system. The answer is to first understand a related notion, which is that central banks operate almost like businesses, with properties, deposits, obligations, and possibly even profits. Without going any farther, the European Central Bank had a net profit of more than 1.6 billion euros in 2020. That comes out to $1.68 billion. But hold for a second, because the Swiss case goes considerably further. The Swiss Central not only makes profits like any other firm, but it is also publicly traded on the stock exchange. And, yes, you may buy a stake and receive a portion of the profits each year, but whence do these profits originate? Furthermore, what on earth is a central bank's business that permits it to make money? The fact is that, as its name implies, the central bank is first and foremost a bank that makes money from loans and investments. The question is, to whom is the money lent? And, perhaps more significantly, where does all of the money it lends come from? On the one hand, central banks are able to lend money to governments, and on the other, they can lend money to conventional banks, which, like any other kind of bank, can offer loans with interest. As a result, profits. The peculiarity of this situation is that the money lent by the central bank is newly generated money, freshly printed money. The money in your portfolio came from a loan given by the central bank to a bank or your government, and that will have to be paid back eventually, perhaps through taxes. But the following is the question. What does I just clarified about the fact that Switzerland has no inflation? Consider the European Central Bank's accounting movements in one section termed liabilities. We find the entire amount of money created in the European economy, 8.3 trillion euros, $8.73 trillion, and all of that money has been lent in the other section, which is known as assets. Eurozone governments have received 4.7 trillion euros in loans, while commercial banks have received 2.2 trillion euros. But wait a minute, because many of you have undoubtedly observed something. When all loans to banks and governments are added together, we are still 1.4 trillion euros short of the entire amount of money released. So the question is, where is that money? What actually occurs is that central banks have a third method of introducing the money they print into the economy. We haven't told you about the third option yet. The third method entails purchasing assets such as stocks, gold, or even foreign currencies that are maintained in a piggy bank. These investments are referred to as central bank reserves, and trust me when I say they are critical to controlling inflation and currency rates. If a central bank has large gold reserves, for example, and an unforeseen period of inflation or falling exchange rates occurs, it can sell the gold reserves to recoup some of its own money. As a result of doing so, the central bank can limit the volume of money in circulation and so stop the depreciation of its currency by repurchasing it with gold or other assets. In simple terms, having a large amount of reserves ensures that a central bank can control the supply and demand for its currency. To put it another way, it wants to make sure that its currency has a steady and safe value. But, if you want a more tangible explanation, consider the numbers in the case of the European Central Bank. As we've previously discussed, these reserves reach around 1.4 trillion euros. That is, the Eurozone's currency has around 17% total backing. Can you know how much reserve backing the Swiss Central Bank possesses? Hold on to your chair, because it has at least 91.5%. More than 9 out of 10 Swiss francs are supported by gold, shares of corporations such as Amazon, Google, and Apple, or foreign country assets. And if the Swiss Central Bank's reserves were shared among Swiss citizens, each would get more than $114,000. Compare this approach to that of central banks that are dedicated to lending money to the government of the day so that it can be spent on current expenditures, which is what the ECB and the Fed have both been doing for some time now. But let's not veer too far off track. We may compare the Swiss Central Bank to a large investment fund. And this is important since we are not just talking about their exceptionally high reserves, but also about how these reserves continue to rise year after year. Swiss National Bank's yearly revenue rises as stock markets rise, due to the returns on their assets. Well, thanks to its central bank's massive investments, Swiss political institutions and the Swiss economy now have two world-class superpowers. The first is that, as the outcome of the central bank's profits, the Swiss state, which is the largest shareholder, obtains special financing each year, essentially free of charge. The second superpower is that, when you think of it, a currency with such much supporting stability and safety is a great investment for all those people who want to keep their money safe. In other words, during times of recession or inflation, the Swiss franc performs almost identically to gold. That serves as a superb safety for a huge portion of the world's savings. To give you a hint, the idea that the Swiss franc has evolved into an investment commodity has pushed its value into cosmic levels. Although in the year 2000, you might have bought as low as $60 with 100 Swiss francs. Nowadays you can buy more than $100 with the identical sum of francs. The value has nearly doubled in just 20 years. That being said, consider this. the more investors who want to acquire francs, the higher their price will increase. The higher their prices go, the easier it will be for the central bank to purchase new reserves and further ensure its security by bringing in more and more investors. As a result, the central bank can continue to create francs in order to swap them for foreign currencies, which it subsequently transforms to a considerable extent into shares, all while avoiding inflation. Yes, the Swiss franc is a currency that is always rising in value. But wait a minute, we're not through yet, because, while the power of its central bank is more than sufficient to clarify Switzerland's zero inflation, there is a second essential factor that we have yet to discuss. Can you figure out what it is? Many of you have probably heard that Switzerland is a tax haven, a country where the wealthy can receive money from questionable sources and pay absurdly little taxes. So, guess what? I apologize for disappointing you. However, following multiple political scandals, the OECD countries managed to put Switzerland on notice for facilitating money laundering through banking secrecy. And the question is, did they truly eliminate it? As a result of worldwide pressure, the Swiss have begun to share account data, and wealthy individuals from throughout the world can no longer utilize the Alpine Republic to conceal their money. It appears that at least in terms of banking secrecy, Switzerland, on the other hand, is not a tax haven. Okay, what about taxes, though? We are all aware that virtually little tax is paid in Switzerland, but how much tax do the Swiss and Spanish governments levy on each euro earned by a worker based on his or her earnings? At first glance, the disparity is palpable. We're talking about nearly half. But, to better demonstrate the point, consider the following scenario. In Spain, a person earning approximately 30,000 euros per year must pay approximately 5,100 euros in taxes. In Switzerland, the same person would just have to pay around 2,800 euros. This is, of course, ignoring the fact that the Swiss VAT rate is only 7.7%, the company's social security contributions, which are among the largest in the world in Spain. Also, there are no taxes, such as capital gains tax. And, yeah, I get what you're thinking. In short, what does Switzerland's low taxes have to do with inflation? Companies from across the world are keen to invest in this country, not only because they will pay lower taxes, but also, and most importantly, because the same cheap taxes will bring in top qualified foreign employees which companies can readily hire. In Switzerland, foreigners make up 12.38% of the population, compared to 12.38% in neighboring France. This percentage nearly doubles to more than 22% of the population. In short, my buddies, the demand and value of the Swiss franc, as well as its low inflation, are prompted not only by the exceptional security provided by its central bank, but also by the favorable conditions provided by its economy to new businesses. Considering all of this, I'm confident that you are now yearning that your country, or at the very least your central bank, will gradually begin to mimic the Swiss model. But what if I told you that, in actuality, the Swiss government is not thrilled with the situation? And what if I told you that the Swiss central bank is eager for rising inflation? Believe me, Switzerland is taking steps to depreciate the franc and limit its status as a safe haven currency. Because of the risk of overvaluation for the economy, the Swiss central bank decided to peg its currency to an exchange rate of 1.20 francs to the euro. The rate of deflation that Switzerland has seen in recent years does not appear to be something that makes it happy. There is reason to believe that persistent deflation will be far worse than moderate inflation. So it's your turn at this moment. How do you feel about the Swiss central bank's model? Do you believe it is the most important cause for franc's zero inflation? You can give your answers in the comments if you believe the secret is in the competitiveness of its taxes. And, subscribe to the channel and ring the bell, so you don't miss out on any of our updates. And if you like the video, please like it, and I'll see you in the next one.